So let's take a look at the SUI chart. Welcome to another video. Hope you have a great weekend. Quick info before we dive into the video. You can register for our newsletter still. That will come out today. I'm running a live stream today for our members, so I've been struggling to send it out early today. But that means there's still time to register for the newsletter. The link is in the description, and then it will take you to our website where you can just let us know your email address. That will come out today and pretty much every week, unless there are some exceptional circumstances. So let's take a look here at the SUI chart. I want to start on the bigger picture, larger time frame. Quick info about the overall wave count. So what I prefer, so the white wave count, let's talk about the scenarios. The white wave count is the most bullish scenario that might even take us to $8.50 and beyond. In this scenario, I find this, by the way, a hopium scenario. This scenario started here in October 23. We have 5 waves up in wave 1. We have a corrective pullback in wave 2. The third wave should get us to 555. The fourth wave pullback might land around 280. And then a fifth wave could get us to 850. This would be, let's say, a bullish scenario, bullish escalation scenario for anybody who likes a little bit of hopium. That, however, is nothing I would personally specifically trade for. And the reason why I wouldn't trade for this is because the expectations, they're just too far out, okay? They are just too far out. Typically, a reward to risk ratio of 2 to 1, 3 to 1, 4 to 1 makes sense. Anything above, it just often doesn't run through like that. I mean, don't expect the chart to form a nice 5-wave move in wave 3, give us an ABC pullback, hold a higher low, and form us a nice 5-wave move. It can, but these altcoin charts are often too fragile for that. So what I actually think is likely is the yellow scenario. In the microstructure, not much different, but here we had an A wave up instead of a wave 1. That was the top in March this year. A B wave pullback in yellow. And the C wave could take us to around about $2.81. Maybe also 428. It will depend on how the microstructures develop. But typically in a C wave, we're watching the 100% extension first. If it breaks above it, the 1.236 extension and so on. It depends on the microstructures, and this would be the bullish count. As soon as let's say the C wave is complete and we see a sign of breaking support, that would be the time to maybe get out or at least reduce the risk. This is the scenario in yellow, but it requires the price to hold above $1.08. I will talk about why that level is so important. Then we have the bearish count, and I find this likely. And first of all, why do I find the yellow one more likely than the white one? First of all, because altcoins in this section, in this cycle so far have been quite weak. That's only one reason, but the other reason is, and that's more significant, that this pullback into the August lows, it was a little bit too deep for a wave 2. It's valid, but it's still too deep for a reliable wave 2. Therefore, I prefer that this is a B wave. At least the bearish count is possible as well. You don't see it here so well, but I will show it with the lines. So wave 1 to the downside. Okay, so it's a bearish. Wave 1 momentum is down. This currently is a wave 2 corrective rally because only in 3 waves so far. Should we see a break above $2.16, so the March high, and a 5-wave move up, this will be invalidated. It's now the time where it would play out. If this is the red count, somewhere in this region here, we will see a reaction, a break of support below $1.08, and that would be the signal that the third wave down is unfolding. Please note this is highly likely. It is not anything to scare people, but it is. First of all, you can interpret that as a 5-wave move down, not clearly. So I prefer actually the yellow count, but red is just the risk, okay? So I don't prefer the red count. You could say the bearish alternative is in red. Yellow count is primary. The white count is the third most likely one, okay? So the yellow count is the most likely. The red one is, the red one is currently the second most likely, which is also likely. I can tell you that a break below $1.08, however, will shift that sequence. So it would mean that then red count will become most likely, okay? It could then take us here to lower prices. And if we take a look at the 4-hour chart, this explains why the red count could play out from here, because the red scenario would suggest that the current rally is an ABC structure, which is why I set down here it's still a viable trade even in the red scenario. because we had a 5-wave move up and a 3-wave pullback, and whether this was the red count or the yellow count didn't matter in September, early September, yeah. In both counts we were watching for higher. Now this is played out quite directly without any deep pullback, so there wasn't really any nice pullback afterwards that provided an entry opportunity, which is sometimes the case in these impulses. And even in the red count we could stretch a little bit higher. $1.77, however, is the first ideal target for the C wave. That's why I say, if we see a reaction in this region, maybe at $1.77, then this would be a good signal that the third wave to the downside is unfolding and playing out. Very, very important. And in the very short term, this could, however, in the yellow count extend higher. As I said, the yellow count is currently preferred, but a break below the upper micro support here at $1.26 would be a first warning that the bulls are starting to lose, they're starting to lose momentum, basically, okay? The bears are starting to take the lead, but it would also require a break below $1.08. So $1.26 is too weak as support to really confirm a bearish scenario, but it would become much clearer below $1.08. So that's the key, because that's the 50% retracement of this entire rally that started in the early 2nd of September. And any break below that 50% retracement of the entire rally, because I can always be wrong about the microstructure here, right? For the microstructure, the upper support area is relevant, but if we see a break below $1.26 here, we see a break below $1.26, that would be the first signal, but that would only mean the microstructure has to shift. Any break below $1.08 and this move to the upside cannot be an impulse anymore, because it is a break below the 50% retracement. And I don't, this means it's not an impulse anymore. Yes, of course, it could turn into something different, but at some point we just have to say red is more likely. It would then mean, okay, yellow might still be an alternative, but certainly not as an impulse. So it is going to be a mess. And also I have to say this initial move up is a 5-wave move. So tracking this as a diagonal will be challenging. So it's probably then red. That's why there needs to be a focus on these support levels. Next upside targets $1.77 and then $2.18 here shown on the chart in the next upside fib levels. That's the update about SUI. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.